This is your LMAX Exchange technical update for Tuesday, September 5th, 2017. Euro dollar. So the euro is seeing a minor correction right now off that recent 2017 high at 120.71. And at this point, the market is wondering whether the correction will extend for something more meaningful, or if we're just going to put in a quick high or low and continue quickly back above that 121, that 2071 2017 high, and up towards the next measured move in the 121.50 area. At this point, key support now comes in at 116.63. That's the low that we'd seen back on the 17th of August, and a breakdown below that level would be required to force a shift in the structure and suggest a more meaningful corrective pullback. Until then, again, any setbacks are viewed as very small corrections ahead of what could be a continuation of this uptrend. Right now, sterling dollar. Cable has been consolidating over the past several sessions, and even with that break up to a fresh 2017 high around 132.70, the market hasn't really been wanting to go anywhere. Right now, expect continued choppy trade and consolidation ahead of an eventual break, which should see a move to the top side beyond 132.70 and in towards the 135 to 140 area further up. This is because we had seen that breakout above 127.75, previous range resistance off the 2016 plus 30-year low, which did signal a shift in the structure. But again, for now, we could see more of a choppy consolidation roughly between 126 and 132 before the market decides that it wants to continue with this major recovery that we're seeing. And so this strategy should be to be looking to buy into any extreme setbacks towards that 126 area in the sessions ahead. Dollar yen. So dollar yen has been showing signs of potentially wanting to bottom out after stalling just shy of the 2017 low from April, narrowly averting that level in the previous week. And so the risk is potentially for a move back towards the 114 to 115 area, with the market seen adhering to what has been a range trade over the past few months. At the same time, the market would need to establish above 111 to confirm such a push, and until then, the pressure does remain on the downside, and there is continued risk for a breakdown below that 17 low. So again, it's a bit of a wait and see here with dollar yen, possibly looking to bottom out in favor of a range resistance, but that range resistance in favor of a move back towards range resistance, but that will only be strengthened if we break back above 111 first. Until then, the pressure does remain on the downside, and we could see a retest of that key 2017 low. Euro Swiss. So Euro Swiss has been consolidating nicely off the recent 2017 high at 115.39. That was a move that we had seen, first time seeing levels like this since January of 2015 when we had that collapse below 120. And right now, the breakout that we had seen recently, several days back, above 112 was a significantly bullish structural shift, opening the door for more upside in this market ahead beyond 115.39 and back towards 120. But again, in the interim, these studies are unwinding from those overbought readings, and there is risk that we see pullbacks before the market heads higher. Look for dips to be supported by this previous resistance turn support at 112 ahead of an eventual push beyond 115.40. Aussie dollar. So Aussie right now is consolidating off the recent 2017 and plus 2-year high at 80.66, and the market is wondering whether it wants to get up there to retest and break that level, or if it's going to put in a lower top or a double top ahead of the next downside extension. Key support here comes in at 78.08. A breakdown below that level would confirm some form of a top and open the door for an acceleration of declines here towards the 75 to 76 area. But right now, 78.08 below and 80.66 above are the key levels to watch. Dollar CAD. So despite the breakdown last week to a fresh 2017 and plus 2-year low just ahead of 123, the market is still showing signs of a possible double bottom, as it doesn't want to really establish below 124. If the market now pushes back above the recent high that we saw last week on the 1st of September, that Friday high, if it pushes back and closes above 124.90, that would strengthen the double bottom prospect and open the door for an acceleration towards the neckline at 127.80. So despite this latest breakdown, the structure still favors a bottom here and the potential for this major double bottom that triggers a break of the 27.80 neckline and opens the door for a move towards the 131 area. Kiwi dollar. The New Zealand dollar has broken down recently below some support at 72. The breakdown now exposes a test of the 70 psychological barrier, with deeper setbacks potentially then seen towards the range lows, which also coincide with the 2017 low in the lower 68s. At this point, it would take the market breaking back above 74 to really put the focus back on the top side towards those 2017 and plus 2-year highs above 75 at 75.58. SPX 500. The S&P 500 had been showing signs of wanting to potentially top out, and setbacks did open the door for a drop all the way down to 2417, but again the market was unable to break down below 2400, and this does keep the focus on the top side here, leaving the possibility open for a break to fresh record highs beyond 2491 and through 2500. Overall, studies on a longer term basis continue to warn though of this extension and the possibility of a bearish reversal, though again we would need to see a breakdown below 2400 to confirm as such. Until then, again, the expectation should be for the possibility of fresh record highs. Gold. So gold has been adhering to our outlook, our constructive outlook, which continued to warn of upside through 1300 and towards the 2016 peak, at 1296. This reads 2017, but it should read 2016. The focus right now is that the market has been breaking to 2017 highs, well beyond 1300, and again 1296 is that 2016 high, which is expected to be tested over the coming sessions. Only a break back below 1260 area right now would delay the constructive outlook, while the market would need to establish back below 1200 to negate the constructive outlook for gold.